Good evening, Wizards, and welcome to episode 11 of Wizard Wednesdays. We finally breached that milestone, episode 10, and it comes at a great time in the market once again. So, by all means, we do not need to cover much of the altcoins besides Litecoin, XRP, and Ether. And looking at the BTC dominance right now, the majority of our focus has to remain on BTC after such a huge bullish momentum we've seen in the past 2 weeks. So, the great thing is with Wizard Wednesdays, it's been perfectly calculated. Now you're hopefully starting to see why it's actually on a Wednesday. It's not just because it's catchy and it sounds good with Wizard. It's also because it gives you a perfect fine line with early week momentum and also a way to preempt how the potential remainder of the week can work. So you're getting an early bit of insight for the weekly candle where we can then get enough data to start confirming what could be happening for the week ahead. So this has been the perfect example. It hasn't really been something I've wanted to discuss too much or make it sound all cool and preempted, but the reason being is because of these scenarios in the market, and that's why I place so much emphasis on those weekly candles and monitoring them early on in the week. So kickstarting with CoinMarketCap, the BTC dominance has almost stabilized to a 56.5% region, which means we can still focus on BTC and now have a more realistic outcome for the altcoins to follow suit as well. So as long as we're still above that 50% dominance, a lot more focus is going to be put on BTC. As you would have noticed, every time this starts rising, we have to place even more on BTC. So looking at the market today, it's been fairly stable. It's been a lot of volatility, but it's overall been opening and closing around the same sort of ranges, which we'll be covering in a second. This is why I've managed to just kind of take some time off the charts and just monitor BTC from a more zoomed out perspective, because right now we are just currently stuck between a range which is hopefully going to break out very soon and provide us further clarity on where the market could be heading. Hopefully by the end of the week or early next week, we should be seeing said movement. So Ether's looking pretty good today. We have been seeing a bit of a push up on that, which we'll be covering in a second. XRP already dipping a bit lower towards the regions, and overall we are now slowly but surely falling into place with the analysis covered almost 2 weeks ago. So what we'll do is go over to XRP, and I think this is the first topic to cover. One thing you will notice straight away for the trained eye is an inverse head and shoulders, obviously on a 4-hour time frame, very solid, also forming upon a huge bullish momentum. So many people are messaging me saying it's going to blow through the roof. The inverse head and shoulders is perfect, which to be honest, it actually is. And if you first of all take into consideration this range, so the first thing we'll mention is the trade covered in the last market analysis video. The trade was covered around the $8,100 region, give or take around these zones here. So if you followed the analysis and paid attention, you would know a simple risk reward even above there from the prior wick with the stops there. You could be targeting around $7,300, a simple 2-to-1 risk reward, or even just lowering your stop loss a bit more. It's completely down to yourselves and how you want to trade this scenario. But overall, if you have taken the trade even from these levels, you should at least be in a bit of profit just below break even. So looking at this level here, a huge region to take into consideration. Before we start going to a more zoomed out perspective, we have to monitor this trade first. So we're stuck between this key level right now, and if I was just to quickly draw a range in purple, just to give you a bit of an insight into where we're trading in between. Realistically, we are stuck now between this range, bouncing back and forth, as you can see, rarely breaking above around $8,070, but overall, we have seen the occasional spikes breaching around $8,200. So all you're seeing right now is a constant bounce back and forth of price breaking in and out of these regions. So one thing to only really take into consideration right now is the higher highs that have been forming, also making a great trend line and a potential pullback to this region if we are going to potentially break through this level and rocket higher. So everybody right now preempting a simple clean breakout. However, I do believe there is a nice short opportunity to catch, even if it does potentially mean we do begin reversing and breaking to the upside. So you would have noticed there has been a massive setback on giving trades and giving analysis, but the market is now showing clear levels of support and resistance, whereas trying to short tops and bottoms here is just going to lead to disaster. So you're seeing a breakout, a retest, a pullback, another retest. We have a clear level of support now at $7,000. So should that be broken, you already know we're going straight down to the 5,000. So taking all these levels into consideration, we also have 7.4 down to around 7.2. So the reason being for this 7,300 zone, even dipping that a bit lower, making that nice and green as a nice profit taking target. I do believe we could be seeing a nice rollover and break through this box before potentially retesting. And the way I will try and put this into perspective is the 78.6 fib. We have a nice body to body on the 1 hour time frame. Let's just get this all fixed, and on the daily as well. We have a nice Fibonacci in play, as you can see, a body to there. Realistically, if I even drag this up to there, we still have the A, the B, the C rejecting several times, lower highs being formed, easy regions around here. Worst case scenario, drag this down, all of the levels are still abiding, and look exactly where that level abides with. So I'm going to take that into consideration, and if you really want, you can also even drag that up there, and it still makes perfect sense for all these levels. But for me, this looks like a clear body to wick formation. All of these levels are holding perfectly for now. So again, I am more confident to provide bearish analysis, and I do not really care, because until this level breaks, all focus can remain on the downside. As I said, break above, we switch immediately. But for now, we have to pay attention to what the market is showing us, and it's showing us a clear consolidation. We have not seen this throughout the whole bullish momentum. So to see such a huge amount of stability and price failing to break within a certain level after such a bullish drive, it does just show the bulls are now battling with the bears, and clearly the bears are slowly taking control to be able to slam price down and then reject this region again and again, even if it means a nice short-term intraday or a swing trade down to this level. Guys, you can make a lot of profit. Looking at this movement here, you're looking at around a $700 move, potentially even dipping lower to around a $900 move. Looking at that in comparison to what we were trading between before, a huge potential movement to actually capture should we start seeing those movements break below. So looking at that 30-minute right now as well, let's just look at this. Rejections galore, guys, head and shoulders everywhere. People say it won't work on a bullish time frame or a bullish market or momentum. It absolutely does, and I believe the inverse head and shoulders could in fact be a trap. So before we start getting to these longer term perspectives and looking from a more zoomed out region, looking at this now, this short opportunity has a great risk to reward and a nice potential to catch a long, even back up to around 7,800. So looking at this now, let's just say from here down to here, we see a Fibonacci pullback. Let's just say we even drag that down to the body. What you are looking at, if I now remove these levels, take into mind these targets here, this also aligns perfectly with prior resistance, now potentially turning support if we pull lower. So all we'll do, and I don't want to make the charts messy, but we would just duplicate that up there, plot a nice clean zone around this region here, and this level will leave nice and wide as a nice potential target. So taking these all into consideration right now, we do have some nice regions to mark out. I'll mark that around 7.3 to around 7.2. I think that's a very fair and nice region. And obviously, if you start seeing dips below or any potential further spikes, just take into consideration these levels. But let's just say we tap this trend line now. Remember, wick to wick, keep it extended, because we know the market likes to play tricks. Here's how you can start looking at this. Wick up to wick, from the A, the B, the new C. Look at the perfect alignment here. Just a bit lower, taps this level first, that will align perfectly and spike down to this level here. 78.6 aligning perfectly with both Fibonacci setups. Again, just doing a bit of Fibonacci inside of Fibonacci here, you can pretty much see, if I draw that down, look at the alignments with these Fibonacci extensions to the retracement levels. It's just really adding up and making perfect sense. So although everyone's looking at this bounce and they're expecting this reversal to just blow through the roof, I'm looking at the intradays as well, the lower highs that are being formed, the attempts to break lower. I do believe this floor is going to absolutely give way in a very short space of time, rapidly surging us down to 7,300. So paying special attention to that region, you got the ABC, and again, confluencing with that level should we fail to break and simply hold this trend line. Again, this is a 4-hour time frame, so in a matter of hours, we could easily be at this region within, let's just say, a day and a half to 2 days. If it taps this level, if it doesn't happen by the end of the day, you now have a 78.6 Fibonacci to potentially take into consideration, which could then be the upside movement. And again, I've even said, even if it does break this in the short term, I do not believe this will be the reversal, the upside momentum and bullish momentum point. I do believe this will be a tap, another blowout to actually wipe out all the stop losses from this region. As you can imagine now, once this pulls lower, everybody will be trying to short, as they would have believed it's the confirmed bottom. Then I do believe from there, though, that could lead to a potential of a pullback higher, potentially stop loss hunting, and then the real reversal begins, which would definitely be a massive scenario. However, should the momentum fail, guys, it's very simple. We would then start considering this reversal on a daily perspective, 2 candle body closures precisely at this level, down to the next candle body closure here. Although when the candle falls down, we're preempting in advance what could happen. So extending this zone out, price could tap, hit the Fibonacci, pull back up, tap the new A, B, C, and potentially start slamming through $7,000. Once $7,000 breaks, that floor there will break, retest, and we just begin descending into the 5,000s and 4,000s. So on a daily perspective, as I covered already, if I now close out this zone, let's just get rid of these fibs for 1 second. Let's just get rid of these. The trend line can stay for now, actually, keeping that nice and simple. This level here is simply an accumulation of high liquidity and sell orders. As we can see, that's now confirmed by the tap into this region and the break lower. Looking at this here as well, extending that down to there, tap, fallen a bit lower, tapped again, rolling down. So what I said in the last analysis video, I believe it was yesterday or the day before, I said quite clearly that the daily candle, even if it pulled all the way back up, would still provide a bearish momentum to the downside. And we're seeing that unfolding in real time. Although I did hope to see the next daily candle just engulf it. As you can see from now, we're slowly but surely making way, which could just lead to a very erratic downside meltdown. So again, for me right now, I'm much more confident looking at this chart. Weekly perspective, looking at the weekly right now, as I said as well, weekly candle closure like this, or a weekly candle closure even back up here, would leave a huge wick to the downside. Again, perfect retest of 7,600. All that would tell me is that moving into the next week, just as you see here many times over with a candle closure like that, it means at a key level of resistance, the bears, trying to paint a picture for all of you here, it would mean price is driven up to a floor. The bears have said no chance on earth are you breaking higher. They've slammed down. For the first time ever, the bulls have finally found some weakness, and the bears are finally showing that you are not breaching this level. This can push a lot of bulls out the market, and then psychologically, as you see price slowly breaking lower, it will just push even more people out the market. So what would happen is, let's just say the daily candle even closed back within this box. The reason I think it would roll over is because we've already shown now with such a sharp movement in the early days of this week, it shows now the bears are willing to take control and they have the power to do so. Pushing price all the way back up into this box would simply mean the bulls are driving price back up because they know it's time to get out of the market. So again, I'm hoping you're seeing the market how I do, because I do not look at candlestick formations and recognitions or anything. I turn these candlesticks into stories. I paint an absolute picture of the chart and what's going on in the market. Imagine there are many human beings inside these candlesticks pushing them like pull rope or whatever it's called, tug of war, just pushing people back and forth, battling over which direction they'll go. That's the best way to envision it. So if price goes all the way down and closes back up here, that simply means the bulls have driven price back up with all of their force. They've understood now it's going to be a potential reversal point, and they're going to start getting out the market at least at break even or in a small loss to cover their profits. What happens from there? Bang, the bulls are finally out the market, the bears take over, and we start slamming through the 7,000 region. So that's what it's looking like for me right now in this current point in time. Again, it can all change in a heartbeat in any given moment, but looking at this right now, ignoring all of the mess and rubbish that's going on, we are simply filtering through a range, just bouncing back and forth, several breaks. So if you want to catch the real bulk of those moves, minus those wicks there, you're looking at this pretty much, to be honest with you, even sending that down to around 8,080, just bouncing, consistent bounces back and forth. So once one side gives away, that would obviously also confirm a potential rocket through $8,200. So you could even start looking at potential longs or preempting a very small position upon a breakout. But watching this wick here rejects that level is a very big sign for me to focus on the bearish momentum for now. So as you can see, huge bullish candles followed by bearish. It's a big mess, and we've seen it before. Consolidation, as many people saw just happen in here. We held that floor. Everyone was like, reversal, break higher. I told you it would drop, and it absolutely melted. So I do believe the same could be occurring, at least to this 7,300 to 200 sweet spot for now. So going over to LTC, as you can see, we tapped that level, rejected our $108 zone. I said if we didn't break, we're not going higher, and Lord and behold, we have not broken higher just yet. So these three trend lines still in consideration, nothing changes. It can sound long, it can sound tedious, it can be very well annoying, but unfortunately, until these candles close, we are not jumping the gun and following the herd. As you can see now, the level I've marked out has been holding miraculously well. Wick there, candle closure there, body reverses straight away as well. Wick reversal, body closure, closure, spike through. Tap there, failed to break. So if I was to extend this out into a much higher zone, as I've marked out for you all before, you're looking at the wicks here as a good region. So clear closure there, clear rejection there, tap there, tap there, tap there. Now we're closing in line with this level. So again, breakthrough around $96, $95. Bang, we're going straight through $110. But for now, I'm not looking at any of that for the time being. So wicks here looking pretty scary. We have seen a nice V-shaped move. However, when you do usually see V-shaped moves like this, it can be a false movement at such a high validity level. So looking at the daily right now, again, weekly candle closures as well, just like BTC. Because the dominance of BTC is higher, we can look at the likes of the weekly here. Nice candle closure despite being at this floor. This could be a very false movement as you've seen here before. And a great example of this is here. And here you're seeing the selling momentum giving you an early warning. This is why I only really trade XRP and BTC, and I will definitely get into more XRP trades soon once this mess is all over. But again, this is just proving the point of the precise rejection we covered in the last breakdown and Wizard Wednesdays as well, tapping that moving average, looking at potential volatility into next week if we do close like this or even close upon a pullback. As you can see, huge pullback after the bears sunk the price down. A quick attempt to stop loss hunt, as it's very clear now we're going to start reversing, and bang, we absolutely melt. So paying special attention to around 44.5, 45 cents. Fibonacci levels bouncing in between this clear range anyway. Let's just mark this out for safety. A very large range, but look, the liquidity has been provided there. Should look out for this range. It could all very easily unfold, and should price start breaking into this region, what an excellent short opportunity you will start to see on rise as well. So daily markings, looking at this on a more intraday level and an intraday level, we of course still have that Fibonacci eye unfolded as well from the body to body. Very nice and clear level, marked at 32 cents and 35 cents, give or take, potentially dipping down to around 34 cents. A, B, C, nice little tap. Should I draw that down to there and then extend this a bit lower? We do pretty much, we've fallen just short anyway, but as you can see, they're still aligning with our preempted level. So without a doubt, should we start seeing that drop, we're at least coming back down to this trend line around 32 cents. So looking at the rejections here as well, guys, as a further confluence, using these in line with BTC. XRP, break below, rejection, pull up, spike. Remember, this was once resistance, broke through as support, reject it as newfound resistance, begin slowly, potentially climbing lower. 4-hour perspective, trend lines holding nicely. We have the moving average holding as well. However, look at this right now, lower highs forming. So we very well could be snapping through this trend line, as I always like to say. Pay special attention because this one's already broken, rejected. Could be seeing some volatility around the Fibonacci potential regions. Retest, retest, bang, straight down. So it is looking favorable. Many of you guys yet again sending me those profits in and just showing that by capturing the bulk of the movement before the majority, you're putting yourself in a big fortunate favor to actually be catching the majority of the move. So again, paying special attention to this candle closure. Even if we saw a spike down and a pull up higher, by no doubt whatsoever, this would just roll over straight into next week. Again, breaking lower, as if this trend line breaks again, I am more than happy to still confirm and predict a potential 27 cents move. So happy to focus on that as well for the time being. But BTC for now, these daily candles, we are seeing a lot of lack of push to the upside. Despite the pulls to the downside and the rejections higher, the wicks to the upside are much smaller, showing me the bearish momentum just being pushed. As you can see here, push. Once the candles start slowing down in terms of wick size, bang, we reverse. So again, it's all looking good. I'm hoping you guys can see now yet again why we wait for patience. And now that we're seeing this clear picture, we're seeing zones, we're seeing consolidation, it's much easier to gain an overall market bias of what could be unfolding. And I believe these wicks here are just teasing us for further downside to come. LTC in particular though, let's just drop down to that daily region. As long as we can consistent, we have another head and shoulders forming here. No doubt the 4-hour will show that clearer. Yep, the shoulders, the head, the shoulders again. Looking like it could be breaking through or doing something a bit dodgy. But overall, I do like the overall setup of this as well. So looking at this, the same Fibonacci setup. I'm still targeting at least around $80, and if this trend line doesn't hold, straight down to $60, which was the original anticipated region. I just do not think the market's ready to bull run yet, and I'm not afraid to say that whatsoever. I just believe even if we tapped up to the likes of $9,000 breaching this level, I don't think it's going to go. I do not think it's ready yet. It just doesn't look like it. And again, we're just showing consistent weakness at the same levels we were once rejecting before. So inverse head and shoulders or not, call it what you like. It's just not looking too likely right now. So looking at this, I'm very confident to see this movement here. If it does continue higher, we can catch that nice intraday movement. As for Ether, again, another telltale sign is, let's just go to the 4-hour fib first, just to show you this clearer. Ethers look like it's going to fall off the face of the earth. I'm not sure where the bullish ideas are coming from for many people, but A, B, C, twice it's tapped this level, easily looking at this level here is covered in Telegram and Twitter as well. $214 give or take, nice confluence around that zone. Trend line and moving average forming its way higher as well. $196 on the lower end of this spectrum, and Ether coming to play with that trend line there. Giveaway, potential retest, bang, down you go. I believe at least down to where this wick was and rejected, we should be seeing another retest around $240. So the opportunities right now are looking pretty endless. And if you're gauging off Ether's momentum, as I said on Twitter, if we see a bearish closure like this, my goodness, we should just be falling off the face of the earth with relative ease. And again, there is allegedly another golden cross. I'm not sure why everyone's going crazy about these. I've already covered the golden cross. The golden cross and moving averages are lagging indicators. They do not signify anything. And again, if we do see a continuation higher, you can at least consider the fact that moving averages here on the daily, we are going to slam to that golden alleged cross before potentially pulling higher. So golden cross or not, I would not be buying at highs. It's absolutely stupid, and anyone that is kind of going down that route, please just be cautious and do not do anything erratic. It's not a wise idea. Daily Fibonacci levels as well, again 6250, even if we see that 6250 pullback, absolutely beautiful. Having a little look at this right here as well, break, reject, bang, potentially fly higher, but I do not believe it's going to go higher. I'm still all for this potential downside movement, but we'll take it as it comes. I am more than happy to see price begin breaking down to these levels again, or even $6,000 to at least confirm we've got the first bulk of the movement right. From there, we can start projecting and analyzing however the market begins to react, how it could potentially be moving from there onwards. So hopefully this has been a bit more of an interesting insight and a bit clearer now to finally see what I've been talking about for the past 2 weeks. I know in the present moment, when price is, let's just say none of this exists. Let's just say that none of that exists. You cannot see the bearish candles. When you're looking at that green candle from there, understandably, all you're thinking is, holy moly, we're going to just keep blowing through the roof. So when I'm calling potential reversal points or downsides, it's not trying to catch tops or bottoms. It's actually just using these other factors I've said and kind of telling myself a story of how the markets are working. And when you can convert those candlesticks into an actual real life scenario and story, it's a lot easier to predict these movements. Hence why they're now slowly unfolding in our favor. So $8,200 for BTC, great to see. If it breaks through, by all means, let's switch bias. But for now, I'm more than confident shifting the bearish momentum further and considering myself a bear, which I will now say I'm comfortably a bear in this current market scenario. So looking at this now as well, guys, consolidation. Should that level snap, that daily support level, tap, retest, goodbye. $230 retest, and down we go. So again, there are many telltale signs. The wicks are ascending, which is the only real threat, but they're also descending consistently. Look at that. That's a trend line if I've never seen one. 1, 2, 3, 4. Bang, could absolutely slam down. So we're showing progressive weakness and a failure to break that level. Look at that. If I just drag that up there, all that tells me is we've spiked, we've gone a bit lower, and now we're failing to break that bit higher, which could be an easy sign, at least engulfing this candle here. As I said, this candle should be engulfed, dropping us down to at least $230, give or take, and then from there we can dictate how it moves. But for now, I do believe, and again, as I said, in the present of the moment, guys, it can be crazy to see. But now you're seeing this all unfold. It can take a week, it can take 2 weeks, it can take a whole month. The point is, you do not FOMO, because then it gets even worse when you're holding at these regions. And let's just say you're waiting for an upside explosion. You're holding, you're thinking, okay, any time now. It pulls back, you just keep buying and buying and buying. What happens if it slams down again and absolutely wipes you out? Why not wait patiently? I've now entered my BTC short after awaiting 2 weeks. I did not trade for almost 2 weeks, awaiting a perfect setup. Now I feel confident, now I've seen the signs. By all means, I go back to covering one side of the story as I absolutely promised. When it comes to scenarios like that in the market, you have to, of course, outweigh both odds, despite what many people were saying. You absolutely have to be covering these regions. But now, when you look back, guys, I hope you can see, now you can go back to one direction. Should it break? No problem, switch scenario. But for now, we are all in the good. Things are looking very promising, and I'm very excited to see how the market's unfolding, because watching these levels slowly show their validity and how well they're holding, it's just painting a much bigger picture that this could be a very interesting week ahead. Again, dictating how the weekly candle closes as well, and the daily. Even if we pull back, guys, in a sharp spike, simply if your stop losses are above the wicks, like I said, let's just say we do close back in this box zone around 8,100 to 8,200. By all means, just keep those stop losses secure, because if you've caught the trade from my projected region, again, nice candle right now as well. Let's just say short position, even from the current pricing here. You're looking at there. Let's just say you've put it there or there. If price starts closing back within this box zone that I've marked up, it could very well just tap this region, blow through, and then pull back. So it's up to you how you want to play it in terms of stop loss. You do not have to have a big position size. You can either have it here in the event it does what I showed you prior, where you might see a candle closure like that. It goes to just retest anywhere between this wick from around 8,350 and pulls back, or it could simply just tap up, test 8,200 again and slam down. So this huge weekly candle closure for me is looking great right now. We haven't seen a weekly candle look like this in a while. They've all been looking bullish, so to see this even now consistently holding throughout the majority of the week, although we're not going to jump the gun, this for me is very exciting. You can probably tell by my voice, I do believe this can now fall. So first target's nice and simple. From there we can evaluate, even if it's a double trade. You know, I like to catch a double trade scenario, because when you want to come back to the market in a bang, what's a better way than doing an A B and a C, and then catching a D leg down as well. Remember, once we start seeing this unfold potentially in our flavor? Once we see this potentially unfolding in our favor, then we know, yet again, as I always preach, we are moving in synchronization with the market. Once you move in sync with the market and it moves towards your levels, it's much easier to start preempting what's going to happen next, because you've already calculated 2 to 3 weeks in advance. So biggest lesson I can take away from that is patience. Wait several weeks to even a month. The market, once it paints a clearer picture, will then provide an opportunity. The biggest reason you see traders lose, the statistics are 95% fail. I believe it's way more than that. The reason people fail is because they wait for scenarios like this. They see a bullish candle closure and they're like, okay, our time's coming. Stop loss below here, nice and simple. RIP, see you later. And I saw many bulls on Twitter. Go on Twitter right now and have a look at all the people that were going crazy about bullish momentum. They've gone silent, and now they're switching to downside biases. And that's why I say you can use these people as a psychological factor to implement into your trading strategy. I read tweets as part of my trading strategy. That's how powerful it actually is. So more to come on that further as well. I'm going to be covering actual specific lessons on adjusting human psychology and reading how the masses work to dictate this further and aid your trading. So guys, hope you've enjoyed this episode of Wizard Wednesdays. It's been good to have an actual logical trade setup applied into our scenario as well. Instead of just giving some analysis, you've now got the upside bias, which is a very short-term upside bias. I do not mean a long-term target. I am now switching to short 100%. Happy to confirm that. By all means necessary, back to one bias. Let's see how this all unfolds moving throughout the week. Very exciting things to come. And of course, Telegram updates when we see some movement. When we're having periods like this in the market, it's best to just not update you guys and make you, by any means or any form necessary, make any irrational decisions. Sometimes the less I post, the more it's easier for you to actually go and look at the market yourself. Sometimes it encourages you to go off your own back, look at the market and see if there's anything happening. And best of all, I know many people will kind of place trades or make decisions after whatever I post. So sometimes when I limit those posts, it's because I know people may be making erratic decisions in the market. So it's best to just lay back and let the market present itself and give you a much more clearer bias. So guys, see you in the Telegram very shortly.